Gasoline, diesel at all-time highs. How we get here? Coming up on the jog. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It is 8 o'clock here in the middle part of the country on Tuesday. It is May 10th, 2020. Happy birthday, Nicholas. Here's your morning jog around the economic headlines of the world. Let's start off here in the U.S., where we have a new all-time high in gas prices. National average, $4.37 a gallon. How did we get here? Well, price of oil, not really the cause, right? Oil is something like $100 to $110 a barrel over the last couple of months. That's something in normal times like $3.50, $3.75 gasoline. And right now we're considerably above that. Diesel's at $5.50. So what's happening? Well, people don't actually put crude oil in their cars, right? They put gasoline, they put diesel. To take oil and make it into gasoline, diesel, you need to refine it. Reality of the situation is refineries are shutting down all around the world. They have been for several years. They're not running at full capacity due to environmental regulations and overall maintenance schedules. When you have demand in products, not so much demand in crude, because you're not refining quite so much, there becomes a bigger what's called crack spread, right? The molecules, breaking them into gasoline and diesel becomes more profitable for those refiners. Those refineries are making quite a bit of money. Again, most of it's due to regulation and economics, right? For the last 10 years, it's been a very low margin business. Requires a lot of money to spend to operate a refinery. Now, those investments are finally paying off. Well, probably won't be long-lived, right? If you see gasoline and diesel stay this high for a long time, you're going to see demand destruction, right? People just won't drive as much because price is too high. Those crack spreads will come down and prices will probably come down with it. So even though oil isn't that expensive, don't blame one administration or another. It's not about the drilling. It's really about the refining, why gas and diesel is so high. Nintendo with an announcement this morning, 10-for-1 stock split. Playing games with the stock price, love to see it, right? You don't have any good news to share, might as well split your stock. Hope it goes up on a pop. Switch sales down 9%. It's beginning to feel like everyone has a switch. The market's becoming a little bit saturated, a little bit like Peloton, down 22% today. Their market really saturated, right? Everybody's got one of these bikes at this point. It reminds me of that Hey Arnold episode. And this is like for the millennial demo, they'll know what I'm talking about, where Gerald sells all the indestructible watches. And after like a week or two, everybody just has one and he's left with this cardboard box full of watches. Like, what do I do with them? How do I sell them? That's what Peloton's doing right now. They really have no idea how to sell all of these bikes they've made over the pandemic. And really, they're just left with a warehouse full of stuff and no one to sell it to. They need to be like Arnold in that episode and think of creative ways to offload product that no longer sells at full retail. That is going to be their escape from this overload of merchandise. If you want some additional information throughout the week, feel free to find me on the internet. I am out there. Until then, hope you and your family have a really good rest of your Tuesday. I am out.